Hey there traders, it's Jeff from thestockbandit.com. Thanks for joining me for this video. It is Sunday. It is time once again to take a look at where the market stands, where we've come from, what are the levels that we need to pay close attention to in the next few days of trading, because we know that's going to influence how individual stocks move. Now, last week we saw quite a bit going on out there, not only just in the world, but especially in the markets. We saw gold breaking down incredibly hard. We saw the indices all pulling back based on technical action, based on news headlines that were unsettling, and therefore now we are finding ourselves in a pretty interesting position. It's finally a little bit more of a two-way market, and I personally and the members have seen that in the member area. I've been trading both sides of this market, taking the longs in stocks that remain strong, taking shorts in stocks that have been acting very weak, and my watch lists have been pretty split evenly, surprisingly, in recent weeks. Even though the market's been very close to highs, there have been a lot of stocks which have been correcting and therefore offering plays on the short side. Last week that worked out very well, and so let's take a look at where we are. So for the NASDAQ in particular, we topped out up here at this 3306 level on Thursday 2 weeks ago. Okay, so 2 Thursdays ago, 3306. So we had broken out, and we only did so for a couple days before we started to revert back and fall back into this trading range right in here. And that's where we found ourselves. We had this unfilled gap for a little while that got filled on this little shakeout move. Then we rallied very sharply higher to make new highs, only to reverse back down and make a lower low here for the NASDAQ, and that brought a low of 3154, which we rallied from on Friday. You know, this index tacked on 1.25% in Friday's session, but for the week it was still down 2.7%. So still a little bit of a concern. Now the bulls are going to have to produce some kind of a higher high on this rebound. If we see some follow through to Friday's bounce, we need to see, or for the bulls, they need to see a push back through this high, or now they run the risk of establishing some kind of a lower high at some point. So we need to pay close attention to the character of this bounce. Is it able to continue? How far does it carry? Because the first thing that we've already seen of significance here is a lower low. If we now create a lower high, it's going to be much more concerning for the bulls. But the positive is all this back and forth is shaking things up. It's not just a one-way market anymore, and that's going to be opening up a lot more opportunities for traders like you and me. If you're looking for some trade ideas to add to your own, stop by the site at thestockbandit.com. We're running a free trial. You can check out what we're all about. You can see for a week what is offered with a membership and the types of plays that we take and the narrow risk compared to the larger gains that we're looking to accomplish through trades. So we love to show you that, what we're all about. So let's move on to the S&P 500, which really last week tested and actually broke this primary uptrend line that goes all the way back to this November low. So Thursday we saw a close beneath that trend line, and then Friday we rallied back up enough to reclaim it. We were up almost 1% on Friday, but for the week this index gave up 2.1%. So at this point, this level right here is still the big level. We have seen a few touches in the mid 1530s. This 1530 level is going to be very important. And keep in mind that was some resistance back here during February before we finally got through it several weeks ago to continue higher. So 1530 is this white line. That's a very important support level. Right up here we've got the high at 1597. So we've got some room either way here, but the more persistent selling that we've seen in the last week and a half has really opened up some eyes to the fact that possibly this market has become a little bit tired and definitely a little extended after a multi-month rally like we've been seeing. For the Russell 2000, this index has been given the best signals of late, and I've been pointing them out here in the weekly video. I've of course been sharing them with subscribers, but we saw this index tack on some 24% off this November low into this 954 area. Okay, that's where this recent resistance has been found. We then pulled back, and remember, this is like Easter week right in here. All the other indices were breaking out to new highs. The Russell didn't. And it had been leading the way higher. So when the leader becomes the laggard, you've got to pay attention to that. We saw this first pullback off that 954 with a deeper correction in this index than any other index. Then we saw a rally up to create a lower high at 951. So again, we saw the other averages making highs while this actually created a lower high. And then last week we saw some continuation to the pullback that began the previous week. This index gave up 3.2% on the week, and that's even with a 1.2% rally on Friday. So for now, this 894 level is support. All right, if I can write that in there, that's this level right in here that we've just narrowly held above. We're now bouncing here, and then of course this 932 level, that's right in here. That's where that's kind of the next level on the way back up that we need to pay close attention to. 932 right in there. So the Russell definitely sending some bearish signals here with not just a lower high right here, okay, those one high versus the other, but we've also now gotten a lower low as well. So this kind of shifts a little bit of the short-term trend, but in the intermediate term here, we're still moving laterally in this big channel, if that makes sense. So it's really a matter of time frame here, even though this index definitely looks to be weakening. And then finally is the Dow, which truthfully is the least important to me, even though it's the oldest. It's the one that Main Street is the most aware of. They come home and turn on the evening news. They see that the Dow is still holding above 14.5, for example. But the fact is, this is only 30 stocks, and we've got to keep that in mind. So 14,380 is right down here. That's this multi-week support that's in place. We're now off the highs, set right back here, 14,887. So those are really the two levels that we need to pay the most attention to. Right now we're caught in between them. We need to see how the days ahead unfold, but we've seen a decent little pullback here. This index gave up 2.1% on the week. If we rally to a lower high, then of course break this 14,380 level, it would definitely mean correction time for the Dow as well. So there's a look at the indices. Thanks again for joining me this week. Have a great week of trading. I will have more for you soon here, but until then, trade like a bandit.